Well, welcome back to the channel, family. Welcome back. It's Coach Jay coming at you once again. Family, listen at this. I want to go back and talk about this young lady I was telling you about that I was trying to help secure her financial future in another 26 years from now. She's 34 years old right now, and she wants to be able to get to a point where she's no longer having to exchange her time for money. And I asked her, I said, what would you like to live off of by the time you're 60 years old passively without, once again, having to go to work for money? Getting your time back, okay, and still be able to live out your life with dignity. She said $120,000 a year. I said, okay, all we're going to do is you can do this for yourself as well. We're going to go ahead and take that $120,000, multiply that by 25, and that'll give you the number that you need to be able to pull off some type of investment vehicles passively to be able to get $120,000 a year without that money pretty much running out. And that's based off of the worst case scenario. 4% rule of thumb is what we're pulling out that money. That's how we got that 25 exit, and then we're going to pull out 4%. And I have moved to talking about pulling off 5%. So if she pull out 5%, she'll be able to get $150,000 off of that $3 million that she has sitting over there in her two investment accounts. And these are two investment accounts I am going to suggest. And they're all going to be index funds. You know that. So go and find out the index funds in your 401k plan, and also go out there and find the index fund in like Fidelity, Charles Schwab, or Vanguard, or T. Rowe Price, or something like that. But get index funds because they have lower expense fees. All right. So what we're going to do is she needs to invest $2,300 a month. This is how I would do it. We're not even going to count the company match. We're going to count that as gravy. All right. So once again, she 25x her number that she thinks she needs to live on in another 30, almost 26 years from now, at the age of 60, where she no longer has to exchange her time for money. She can just have her time back to herself without going to work and passively pulling off income of $120,000 a year. So she got that $3 million sitting over there. Now this is how we're going to get to the $3 million. So for the next 26 years, every month she needs to invest $2,300. I will do $1,953.33 contributions into the 401k plan, and also open up a Roth IRA plan and contribute each month $341.67. That's the total of $2,300 right there. All right. And once again, once you turn 60 years old, tax-free money, she can start pulling that money off $120,000. Or if she want to use a 5%, $150,000. And that's not to include the company match. That's how you gamify it, family.